Hi everybody, this is Chris from Turning Point Life Investment. This is going to be an analysis of the Russell 2000, the Dow Jones Industrial Average, and other markets. And some trade stuff for Wednesday, May 11th, 2011. We're going to go into a daily view of the Russell. Today the Russell just had a big drop down, closed under the gap it formed yesterday. Um, now the question is this a bearish engulf pattern? Actually, it is a bearish engulf pattern. So right now, I don't think the RUTs can actually be moving up. I think it just could move down, possibly to this 830 level, where the 50-day exponential moving average is, and then maybe chop around. If it breaks under this support line right here, which is around I believe 825, 826. If it breaks under that support level, it's going to move down lower. It's probably going to come down to 815. Now, once this support level is broken, then we know that the RUT's going to make a new leg lower, probably similar to this, where after it broke its 50-day exponential moving average, it moved down about 20 points lower or so. So I'd be expecting, if the RUT does break under this 50-day exponential moving average and the support level, similar price action there as well, and we would know not to buy. Right now, the odds do favor the RUT just moving down and then chopping around, but I don't really see the RUT by the end of this week moving up to retest its brand new highs that it made in May. We're going to move into an hourly view for the Russell 2000, the RUT. We can see that, a few days ago, it made a nice move up, then it moved back down. This red line is the 20-hour exponential moving average. Well, usually when prices move up and down, between its 20-hour exponential moving average, it's a sign of consolidation or choppiness. It just really means that there's no trend right now for the market, or in this case for the RUT. So all I can do is just with the information that I have on the hourly view, we can just look for some support and resistance levels, and we know that once they are broken, that the RUT's going to move in that direction. The first thing I want to look at is today the first hour the RUT formed a black candle wrapping around yesterday's white candle. It's a bearish engulf pattern. So first resistance is around $856.50 with this bearish engulf. Now the RUT sold off, and then look what happened here during this hour at 3:30 p.m., 2:30 p.m. The RUT formed a bullish engulf pattern. So the first support is going to be 837.66 or .65. Now if the RUT breaks underneath this level, it's going to probably pull back even further. If the RUT makes a nice pop up, maybe retest this and breaks up, it's going to move up to new highs. That's the only way we can play a consolidation. We can't really just say, hey, I want to buy or sell, and I want to sell. So that's what I'm looking at and how I want to play the Russell. Going into the Dow Jones Industrial Average daily view, we can see that it did make a black candle today. It did hit the 20-day exponential moving average, where it hit it here on the 5th of this month and moved up, in this lower shadow, and then it hit it again today and moved up on this lower shadow. We're going to watch the 20-day exponential moving average tomorrow. If that thing breaks, moves lower, I'm looking for first support around 12,500. It was a nice resistance level here for a couple days. It's also a nice even number. So if that breaks, I'm expecting the Dow to move down and retest its 50-day exponential moving average. If the Dow does move down, I'll be expecting the RUT to make that lower leg I was talking about earlier. Of course, there's the other scenario that the Dow just moves down 12,500 or so around this level, just chops around for a little bit, and then moves back up. But odds do favor a pullback to 12,500 right now, to see what the bulls want to do. Next thing I want to look at is a trade that I did today. I normally don't do these types of trades; they're very rare. This is for ticker symbol FDO, Family Dollar Stores. Um, if I take away today's black candle, looking at this, we can see that $52.50 was first. It was the old resistance. Old resistance becomes new support, and also the 20-day exponential moving average was there. So this was definitely like I believe the buying opportunity. You know, all the people that sold short or whatever, it moved down, they could get back break even and push it up higher. And it moved up, nice pullback lower. Um, just ready to go on the long side. So what I did for this trade, which I normally don't do, is I just bought it the next day without any like confirmation or anything like that. What my plan was that see, I know I said 52.50, but it's really like 52, like 88, 52.90. My plan was my stop was going to be at $52.75, somewhere around. Trying to do this, somewhere around this region. My target was going to be up here, which is around $54.05. And then my entry was around $53.10. So my the difference between my entry and my stop was about, let me see, it was about 40 cents, and then my target was about $1.20. So it was essentially a 3-to-1 risk to reward ratio. That's why I really didn't wait for any confirmation. So I dabbled in the shares this morning, and then it broke under my stop and it moved lower. That's the thing that's tricky when you just buy a stock based on good technical analysis. Is There's two ways to play it. You can always wait for like a confirmation to your analysis. In this case, it would have been maybe a move up, another nice pop up, white candle or so. Now, I would have entered later, which means the difference from my entry to my stop would have been bigger, so I wouldn't have had a 40-cent stop. Might have had an 80-cent stop, or even $1. And the target was up here. It was and the target from the entry might have been 80 cents as well, so it might have been like a 1-to-1 risk to reward ratio. But the probabilities of it hitting my target would be greater than me just buying it the next day like I did today. So that's another thing that I don't do a lot of these trades, mainly because it has a low probability, high profitability. But I do them, when I see like a 3-to-1 risk to reward ratio. So it's just a trading style that you have to get used to, and you have to know the way you trade. If you want more profitability, your probabilities of being right or making a good trade are lower. If you wait for confirmation, the probabilities are higher, but you give up some profitability. So it's another thing that all traders have to do. Like I said, I normally don't do these trades, but the risk to reward was so good, I had to pick it, and plus the technicals were really good as well. I don't mind, doing 3-to-1 trades. So that's all I got for today. Thank you, everybody, and I'll see you later.